Good afternoon, ladies and gentlemen. We are calling to order the meeting of the Rutherford County Benefits and Insurance Committee. And the first agenda item is to approve the minutes of the last meeting of April the 28th, 2011. Do we have a motion concerning the minutes? Motion to approve. Ms. Hickerson and Mr. Sandvig second. Did anyone have any corrections or additions? There being no corrections or additions, then all of you in favor of that, please say aye. Aye. Are there any opposed? That motion has carried. Now Mrs. Stinson will give us an update on our financial condition.
If you refer to Fund 264, I'll walk you through your results as of the end of the end of May. For the month of May, our per employee per month was $612.15 with a year-to-date average of $650.56. When we combine the Care Here experience ending in the month of May, we are at $631.91 with a year-to-date average of $680.66. We ended the 2010 month of June at $718.92 for a year-to-date average of $712.79. Currently, we're trending down at 4.5% over prior year's experience. Do you have any question about those results? If you'll move to Fund 266. Our expenditures as of the month of May were at $847,926.39. This represents 97% of prior year, which ended at $871,311.02. Is there any questions?
Okay, is that the full report on the financials?
Yes, sir.
Good report, but a very brief report. Did anyone have any questions on that report? Okay, that being the case, we'll move on to the next agenda item. And Mr. Tim Street is going to tell us about workers' comp and OJI.
Good afternoon. We're going to cover the data from April and May on the OJI injuries. For those 2 months, we had a total of 42 injuries turned in. For the year, that's going to be 115 total. As we look at the OSHA log summary, 72 recordable. We have 33 restricted day claims, and then there's 12 of the lost day claims. And then, of course, the other recordables are 27. On the next page, you'll see the graph, and we're somewhat following the same trend. From the last few months, we're a little above the last 2 years, but of course what you'll notice looking at the other data here, the severity of the claims is down, so our dollars are about 97% of what we were last year. So we're still doing good there. I think it's just the reporting is up, so that's helping out for us to determine accidents and the type of accidents. Next page, you'll see the net incurred is $75,966.05. As we go through, we'll break down the Rutherford County. What we have is a total of 22 on the county general side, those claims. The Board of Ed, we had a total of 18. And with the Highway Department, we had a total of 2. Is there any questions?
Okay. Are there any questions? I don't think there are. So again, performance is good, and we're glad about that. Thank you very much. Ms. Kelly, are we ready to talk about wellness, I believe?
Good afternoon. I'd like to talk to you about the April and May wellness. We had 3 off-site health risk assessment clinics through Care Here in April and May, and we had a total of 76 employees complete their HRA. That's their annual physical. We had 7 people complete the Care Here Tobacco Cessation Beat the Pack class. American Lung Association estimates that employers can save $3,400 per year for every individual that stops smoking, and that's year over year. So we're proud of those 7 people. Mimi Kiesling taught us the importance of recycling on Earth Day. Kathy Mead with Care Here taught exercise education, strength train at home with the EMA. We had 26 participants. Life Signs taught us 5 ways to wellness at the health department with 65 participants. Hops for Cops came and visited the Rutherford County Sheriff's Department for the day on May 6th, and they stayed from 8 to 4:30 and had individual consults with the employees. And we had a coupon class intro and advanced at Lane Agri Park on 5/21 with 38 participants. We have several upcoming webinars for July and August, and they're listed below. Some examples are superfoods nutrition, strategies for change, and simple ways to reduce stress. All of these webinars are listed on Mondays and Tuesdays and have various times. You can sign up on the Care Here website at www.carehere.com. And our upcoming activities for August, we've got in July, Understanding Your Fitness Center is July 12th at the MTMC Wellness Center. Kathy Mead, our exercise physiologist with Care Here, is going to walk the participants through the different exercise stations and show them how to use the equipment. That's from 5 to 6:30. We have a CPR training certification class at the SORT building through the Rutherford County EMS department. We're going to have a simple ways to reduce stress at community care and nutrition education at the Rutherford County Admin Building on August 11th. Anybody have any questions?
Kelly, on these webinars, do you have any particular way to gather information on what kind of participation you might be having in that?
I have asked them, and I can go back and touch base with them, but as of this time, I don't have an attendance record for that, because they do have a live cast that you can sign in and register, and then you can go back and ask for recorded versions. So they do have a count of people that pre-register and people that ask for a recorded version, so I can get those numbers.
And about how long are those little programs?
I think they're approximately an hour, some 30 minutes to an hour.
30 minutes to an hour. Okay, thank you. Any other questions?
Thank you.
Thank you very much. All right, so now we're ready to discuss the bids that have been taken with respect to long-term disability insurance. And we'll turn it over to Mrs. Stinson, and she can direct our discussion.
We had released a request for proposal for long-term disability insurance, which is an employer-paid benefit in Rutherford County. We received 13 bids as a response to the RFP. And last Monday, a subcommittee consisting of Lisa Nolan, Jess Sandvig, Mary Hickerson, and Sonia Stevenson, as well as myself, reviewed the different proposals submitted by the bids. And you have in front of you both the financial information included in those bids as well as some of the policy language analysis, which can be found on page 2 of the document. Just to familiarize you with the form, Hartford is our current long-term disability carrier, and the current rate with Hartford is 22 cents per 100, and their bid submitted was 0.215, so they reduced it by ½ cent over current cost. Reading the document from left to right, you'll find that Lincoln Financial offers a 3-year rate guarantee with both the 5% commission option as well as a 10% commission option. Cigna has the same arrangement, and then you move forward down the line through MetLife onto the last, which is Guardian on the list. The top line represents one option by the carriers, and it represents the lowest commission amount that is built in. The second column on this document represents other alternatives offered by Lincoln Financial, Cigna, Reliance, Standard, and Prudential. Both Lincoln Financial, Cigna, Standard, and Prudential have a 10% commission option available. And what that does, Cowan Benefits is the broker on all of those proposals, and the additional commission provides some services to Rutherford County through the open enrollment process. For the last couple of years, Cowan Benefits has assisted the county in the development and marketing of open enrollment materials, as well as going out to the different locations that we have determined for open enrollment meetings, and they will conduct those meetings on behalf of the county. As our population has continued to grow, and recognizing that we have 3 dedicated insurance administrators or a coordinator in the insurance department, we see a growing need with assistance for open enrollment. So for the additional commission consideration on the alternative options, they will be providing more assistance in open enrollment, which includes the management and production of a DVD that will be included with the materials and mailed to each employee's home for open enrollment. And that will provide them with additional information about open enrollment, what the benefit options are, how to utilize the system online, and things of that nature. The other on here is Reliance. Reliance offers on their initial proposal that they submitted a 5% commission, and they've also offered a 2-year rate guarantee. On the bottom column, you'll see that their rate guarantee moves to 3 years, and they have offered, but it also has a higher amount associated with that guarantee. There's one other piece of information to consider when you're reviewing this document, and that is with Cigna. If Cigna were to be awarded the long-term disability insurance, that results in a multi-line discount on our medical administration contract. It equates to about 1% of contract value, which would currently equate to $20,000 in reduction on our administrative fees associated with Cigna in our medical plan. When the subcommittee met, we reviewed the financials as well as the plan language being suggested, and the subcommittee determined that Lincoln Financial and Cigna had the best proposals for Rutherford County's consideration, and recommended those as the ones to be presented to the insurance committee today.
And Mrs. Stinson has presented this overview to the purchasing committee as well yesterday, and the purchasing committee concurred with the subcommittee's selection of the 2 finalists as Lincoln Financial and Cigna. So now we're ready to see if we can have a discussion regarding those 2 particular ones and determine which one this body recommends for approval. That being said, are we ready to move forward with the presentations? And Mrs. Stinson has allowed them 20 minutes each, I believe, to make their presentations. So
that's correct.
The first one is Lincoln Financial.
Greg has a question.
Oh, Mr. Hall, did you have, sir? Oh, to wait till they get through. Okay, excuse me. While they're preparing, maybe this may be just protocol, but since the purchasing committee did concur in the selection of these 2 finalists, I'd like for the insurance committee to just affirm their decision to let these 2 firms be the last finalists that we've discussed. So if you would, please, would someone consider making a motion that we confirm the purchasing committee's decision? Mr. Sandvig and Mrs. Hickerson, is there any discussion on that? All right, please, everyone in favor, please say aye then. Aye. Any opposed? Thank you very much. Now, we were doing a little catch-up business there while you were preparing for your presentation.
You guys ready? My name is Scott Warren. I'm with Lincoln Financial. I've brought Jennifer Hanna with me, who works with me and helps me service the accounts out of the Nashville office. and put together some packets for you guys that include our proposal, a presentation of our services, just kind of a synopsis of what we're doing, as well as a couple other pieces of information. But at any point, if you have any questions, please feel free to interrupt, and happy to expound on anything that y'all have questions about. The presentation that I put in your folder is just kind of a synopsis of what we do, who we are, and wanted to go over, who is Lincoln, what do we do. I know the implementation is important as well. Go over the implementation process. With long-term disability, it's a little bit easier than some of the other coverages that are out there with life insurance and voluntary life because there is no evidence of insurability. One of the things that we've done is we put a service guarantee on the implementation and claims payment, just so you guys know that we're serious about being a partner with you guys, and basically putting our money where our mouth is and say that we're going to do a good job, and if we don't, then we're going to refund a portion of the premium. So I'll go over that in a little bit. What's our claims process? How are we going to help control the cost going forward, as well as our account management and the role that we play in, with the partnership in Lincoln from the setup standpoint, as well as the administration going forward. Slide number 3 is just a highlight of who we are. We've been in business for over 100 years, have 1.6 billion plus of group premium out there. We're a top 10 carrier from both a premium standpoint and from a case count standpoint on long-term disability. We have a big block of business and respected in the industry. A+ rated, which is the second highest rated by AM Best, which I know in this economy is very important from a financial stability standpoint. The last bullet point on there is, I think to me the most important, is our persistency in our national accounts, which national accounts for us is 1,000 lives plus. Some groups look at 5,000 or 10,000 carriers. I mean, to be a national account, we know that 1,000 lives and above, they're very important. We want to take care of them. It's also a market that is very competitive. People want to write business to get the names of the client. They want to write the business because it's a big premium. So to have a 90% persistency in that area, speaks volumes, I think, from not only one, our services and how we provide those services because people stay with us, but 2, it shows our renewals are fair. So that's one of the figures in there that we're very proud of. The next page is just a page number 4 is just kind of a sampling of people that we insure. Some of them are in Tennessee, some of them are across the country, and you'll see on there, to us here in Nashville, FedEx and the City of Memphis are the 2 that we're really proud of. They're 2 of the largest employers here in the state of Tennessee. But the other reason that we're proud of it is that the City of Memphis, we've had them since 1977, and FedEx we've had since 1982. And those are 2 groups that could go out there, name their price, and get any carrier we want. And to have one for 35 years and one for 27, going on 28 years now, is it's something that I think speaks volumes to what we do. The Slide 5 is about the implementation, and if you guys do choose Lincoln Financial as your long-term disability carrier, what we'll do is, internally we're going to have a pre-implementation call. We're going to go over everything that's sold. We have your current Hartford contract, so from a quoting standpoint, we think that we've matched up everything that we need to. We're going to make sure the underwriter has everything set up within the system accordingly. So when we have the implementation call with the HR team at the county, then hopefully everything is lined up the way that it needs to be, which will prevent going back and forth trying to get the contracts right, and it'll be right the first time, or very limited changes that need to be made. And the idea behind the process is for all of us to work together. We're going to our implementation. Jennifer and I will work with the county as well as the HR department. We want to hold each other's hands through the whole thing, because if everybody's involved, as opposed to us doing it and saying, "Here's what we've done, now approve it." If we can have complete involvement, then it does count down on errors and makes the transition very seamless. I know that service is very important. You guys hire us to take care of your employees if they get disabled, but also there's more to it than that. And being able to get a hold of somebody is essential. And you can call us, you can email us, you can get online and check things on your own. But we have local representation here in Nashville. Jennifer and I are in that office. The county will also be assigned a national account manager. And what the national account manager will do is it's going to be a liaison between the county, our office, and our home office. Teams are in place from a claims perspective and administrative perspective. The national account manager has about 20 to 25 accounts that he works with. His name is Fred Brown. And his role is to get to know you guys, to have the relationship with the HR team, make you comfortable that you can go to him if you need to, if you don't want to come through our office, or just be an advocate if we need his help for something. He does travel away from Omaha also to to be able to get that face-to-face relationship. So it's something that we're really proud of, and something that we found has by not only having the local presence, but also having a presence in Omaha with a limited cases that he works with, that it's something that we can provide better service that way. The next couple of slides are about the account management. One of the things that he does, and I skipped ahead to slide number 8, is that Fred will be involved, as well as Jennifer and I. We can be there for benefit fairs if you need them, putting together employee communications. If you're interested, we can do webinars for the employees as well. So I mean, it's really as much education as you want from us. We're willing to provide and capable to provide, and have the resources to do that for y'all. Going ahead to slide number 9, the thing that we look at is we view it as a partnership, and we try to put the pieces in place, as I was saying, to not just be a carrier that writes checks if somebody gets disabled, but to really help you control the costs. And so what we do is we don't just provide the claims report that has what the paid premium is and what the paid claims are. We try to provide data that can help you manage your block of business. And so the claims reports that we put together not only show what the premium and the claims are, but it also shows where they're coming from. Are they coming from employees that have been there for 5 years or less? Are they 10 to 15-year employees? From a tenure standpoint, is the plan getting abused by people that are coming on, or is it an even spread? It also shows from a diagnosis standpoint where they're coming from. I know currently, in the way that we quote it also, there's no limitations on there for self-reported limitations, which means that if someone has chronic fatigue or someone has carpal tunnel syndrome, that benefit's going to pay just the same as if somebody has a back injury and is paralyzed. Some contracts are set up where that is limited just because there's no doctor diagnosis to be able to say whether that person is really disabled or not. And so if in 2.5 years we're looking at the experience and where the claims are coming from, if we see that that's a high utilization area, that's something that we can talk about, maybe putting a 24-month or 60-month limitation on there to help control the cost, which is important because since you guys are experience rated based on your size, the experience of the claims does come into play. So, being able to work together to identify, highly utilized areas that could be taken advantage of is something that, we're going to bring to your attention and let y'all make the decision of what to do, but try to provide you with enough data to make that decision. The next slide on there is just, some of the quotes that our clients have said about us. And, to me, insurance a lot of times gets a bad reputation of being an insurance carrier that, I don't want to talk to them. Lincoln, I've been at Lincoln for 5 years. Before that, I was with a carrier that was based out of Boston. And, we're in Omaha. We work with Midwestern people in our home office. And, when they're talking to us here in Middle Tennessee, you kind of can relate as opposed to talking with somebody up in Boston. But, what I like about us is we always try to do the right thing. We wrote a case a couple of years ago, 2 years ago to be exact, for 9/1 for voluntary life insurance. And there was a young lady who signed up for coverage who had a 5-year-old and a 3 or 4 month old. And it was going to be a 9/1 effective date. She was new to coming on the plan. She worked for a school board that we insured up there, and she died on August the 31st. So it was before she had coverage coming on. She didn't have it with her prior carrier. The broker sent us the information just to let us know to take them off the bill because the HR department didn't want to see her on there because there was a very close community there. We saw that in our office, and instead of just taking her off the bill, what we did is we filed an out-of-contract claim, explained the situation. It was a young mother who was working, trying to provide for her 5-year-old and her 3-month-old, and we went ahead and submitted a claim. Our people approved to pay the claim, and it was $35,000. It wasn't a lot of money from an insurance company standpoint, but it was a whole lot of money to a family in a small town in Kentucky. So the fact that in this day and age that a company will still make decisions to pay people that are not contractually bound, it makes me comfortable to go out there and represent them. That I can stand behind the product that I sell. The next few slides we're going to go over talk about our claims process, and what we do, again, it goes back to the partnership of trying to manage the claims in order to help control the costs, is we work with you guys trying to make sure that, we help employees get back to work. And so we were the first carrier to actually implement predictive modeling with the claims. And you can look at a diagnosis and know whether someone's going to be out, on average, 6 years, 4 years, et cetera. But what we try to do is we try to figure out, if an employee is capable of getting back to work on a part-time basis. And by doing so, most employees, they want to, be able to earn the money on their own, collect the benefit check if they need to, which is what the long-term disability is for. But we've partnered with a company that helps. It's called Fast Track. And what they do is they go out and they find other companies that are willing to hire and want to hire disabled employees to try to help them get back in the workforce, whether it be 5 hours a week, 10 hours a week, or whatever, just so they have something to do. And that's a service that we have out there. That, there's a cost associated with that. However, they did agree, with underwriting did agree to be able to include that to you guys at no additional charge. So that's included, which brings me to, there's a on the right-hand side of your folder, there's a page that looks like this. It's a partial disability is what the that talks about. And the first page there, with partial disability, if an employee gets disabled and is able to come back to work on a partial basis, then they're going to get earnings when they go back to work, but also they're going to continue to get earnings from the insurance carrier. And the idea is to help them transition back in. And the first sheet shows what the partial disability benefit is under the Hartford contract. And the scenario is the same thing on all 3 pages. It's a lot easier for me to see numbers as opposed to talk about formulas. And so in this scenario, an employee working 50% of the time under the Hartford contract is going to get a $900 benefit, which is a good benefit for them in the beginning. However, on the next page, it shows what the Lincoln partial disability benefit is. Under the same scenario, the same return to work earnings and hours, with Lincoln, they'd be getting a $1,500 a month benefit. So, it's a situation where they're already in a limited capacity. We're going to make them whole up to 100% of their pre-disability earnings on the partial disability forever, as long as they're eligible for that. Whereas with the current partial formula, it's going to grade down, so you're taking money away from somebody that's already on a limited income and needs the money the most. So I think that's one of the strengths that we bring to the table, and trying to help employees return to work. The next slide number 13, is it's a survey that shows the success rate of helping employees get back to work. Lincoln is the leader. Column number A over there, we have the highest success rate, which again is important because if employees are returning back to work, whether in a full-time basis or a part-time basis, that's helping the claims for the county, helping control the experience, helping keep the cost down going forward. Slide number 14 is what we talked about with the Fast Track and helping disabled employees find a job. The next one, slide number 15, employees who are disabled, permanently disabled, are eligible for Social Security benefits. Social Security is very difficult to get approved for. And, we have a staff in-house. We also have outside vendors that we've contracted through to help employees get the benefits that they deserve on Social Security. And, our rate over 3 years is 87%, which according to the JHA survey, which is kind of the benchmark, JHA is the one that everybody goes to, is we're the highest in the industry. Again, that's only good for the employee because they get the benefit that they deserve, and then also good for the county at renewal time from the claim standpoint. Slide number 17 talks about the online capabilities. Both the employee and the HR team will have access to our online system. The employer will be able to pull contracts, pull claim forms. You can file a claim online. The information will be able to pre-populate into the claim form, which saves time at claim time because you don't have to go pull the employee file to find out what their date of hire was, their date of birth, their salaries, and the idea is just to make it easier for the group and when there is a claim. And the employee can log on, they can see what their benefit is, if it's been pended, if it's been paid, if it's been approved, and the amount of coverage, so that 24 hours a day they can log on there and see that in case they've forgotten from the conversations that they've had with our claim team. We, I know one of the things that we were asked to put together was a comparison of where our contracts are different, whether it be good or bad. I think it's important to note, not only areas where we're stronger, but also areas that may not be the same. And I put the proposal in the packet for you guys. It's on the left-hand side. It looks, the front of it, looks like that. And on page 4 of that contract, or on the proposal, I've highlighted in yellow the areas Where we're increasing the contract in blue it's a little bit different, and I'll talk about that. But the first one on there, which I think is really important, is we have what we call the progressive income benefit. And that's just right now your benefit set up as 66 2/3 of the employee's monthly earnings up to $6,000. If an employee loses the ability to perform 2 or more activities of daily living, it's bathing themselves, feeding themselves, clothing themselves, then we're going to pay an additional 10% benefit. So we're going to take that benefit from 66 2/3 to 10%, to 76 2/3, and then also pay up to another $5,000. So, it's only paid in extreme cases where employees are catastrophically disabled, but it's out there for them because whether they need it for home care, for medical bills. It's just a little something extra because we know they need it, and that benefit does not get offset with other income earnings such as Social Security and whatnot. The next highlighted area on there is the trial work days for the elimination period. And while someone's going through an elimination period, they can come back to work. Whether they're going through chemo, they've had back problems, and they think they can get back to work. Under the Hartford contract, they can come back to work for up to 90 days during their 180-day elimination period without having to start over again. Under our contract, we give up to equal the number of days as the elimination period. So 180 days, they can come back to work without being penalized. So if someone has a bad back, they go out for 3 months, come back to work for 4 months, and then after that 4th month, which is 120 days, they go back out again, then they're going to pick up where they left off at the 3 months and not have to start over. Under the Hartford contract, they have to start over. So, we're rewarding the employee for trying to do the right thing, doing the thing they want to do and get back to work, and yet we're not penalizing for coming back too long. The next two, the SSNRA and the residual with progressive benefit, that's what we talked about with those partial disability checks. Our benefit is richer than what's out there currently, so it's good for the employees who are coming back to work on a part-time basis, where they're going to be getting a little bit more money than they would under the current contract. The PIB maximum that's on there, that ties back into the progressive income benefit that I was mentioning a second ago. The one takeaway is the reasonable accommodation benefit. Our contract is set up to provide up to a $5,000 benefit. The Hartford is set up to provide up to the employee's maximum benefit. So if someone has a maximum benefit of $5,000 to $6,000, they're actually going to get less benefit under Lincoln. But anybody that has a benefit of $5,000 or less, and reasonable accommodation is making modifications to the workplace, ergonomic keyboards, putting a ramp in. Lincoln will pay for that to try to help the employee get back, and that's what that's talking about. The last one on there is the family care benefit. Currently, the Hartford contract is set up for a $350 monthly benefit per dependent for the first 12 months. After that, it goes to a $175 benefit for the next 12 months. Ours is going to be a $350 benefit for 24 months, so it's a little bit richer. It's equal for the first 12 months and a little bit richer after that. Those are the differences on the contract itself and some of the enhancements that we're able to bring to the table, and while we're also delivering a savings. The slide 21 is the last one that I wanted to talk about, which is on your right-hand side in your folder, we have a performance guarantee in there. And the performance guarantee, as I mentioned in the beginning, is guaranteeing a time frame on our implementation, and then also guaranteeing claims turnaround. We're going to acknowledge receipt of claims within 2 days, business days of receiving them, and then we're either going to pay those claims, pin those claims, or deny those claims within 6 business days of having the complete information. And again, we know that you have options out there to choose who your long-term disability carrier is. We may cost the same, we may be more expensive, we may be cheaper. But at the end of the day, I think it's important to know that, we stand behind the product that we're delivering. We're willing to put, our money out there that you're paying us and say, if we don't do the job that you hired us to do, then we feel it's our obligation to refund a portion of your premium because, we fell short where we told you we wouldn't. So those are the areas that I think are important. Again, we talked about the smooth implementation, the service guarantee on that, how we're going to work together. The dedicated account management, also going to have dedicated claims examiners, so it's not going to just be assigned to random people as claims come in. The innovative claims management that we have to help control the costs going forward, and partner to go over the claims data that's out there, and the service guarantee that we have in place to stand behind what we're bringing to the table. Are there any questions about the presentation, about the proposal, about how we operate that I can help with? Yes, sir.
Mr. Sandvig.
Do you have an estimate of what percentage of folks do the return to work who might be affected by the progressive partial disability formula? Just
I do not have that, but I can get that information for you. When I leave the meeting, I'll call and see if I can get that.
Now, Mr. Warren, on about page 3 of that very first document.
Yes, sir.
You have 112,000 group policies in force. Is that what that is telling us?
That does not count the individual policies or the retirement policies.
Okay, so
On your performance guarantee, the performance guarantees aren't specific to the performance on the Rutherford County block of business. It's across your entire block of business, correct?
Yes, the performance guarantee is specific to Rutherford County, and the not how your block of business runs, but it's specific to the turnaround time of us getting sample contracts out to you guys for approval for final contracts, as well as the turnaround time on the claims for Rutherford County specifically, and the timeliness of us getting to those claims.
Okay. So the comment in the brown section of all guarantees are based on Lincoln's entire block of group business is relative to what?
It's built upon the, that's what our average is across the board, so that's where
Okay.
the dates come up for that.
did you understand that, Ms. Denson? I still didn't follow that. Are these?
The,
are you measuring this 95% against just Rutherford County?
The 95% is measured against Rutherford County. The number of days, so the 2 business days and the 6 business days, that benchmark is set by our average on our block of business. So the benchmark is set on the block of business, but the measurable will be on Rutherford County specific.
Okay, I have that now. Other questions? Let's see.
Ms. Stevenson has a question. Ms. Stevenson has a question.
Oh, Ms. Stevenson.
On your elimination, let me make sure I've got here, your elimination period, you have 180 days, but then you have a qualifying period of 360. I read in here in one place where it says you wouldn't have to go through a double elimination if you came back to work for a few days and started over again. So why wouldn't you just leave your, the elimination and qualifying in the same number of days?
What the 360 is the 360 is a total number of days from day 1 of going out on disability and starting your elimination period that you have to complete your elimination period. So you have your 180-day elimination period in there, but what I was mentioning earlier was the trial work days. So that you have 180 days that you can also come back to work within that 360 days. So that's the 360 is the total from start to finish that the elimination needs to be completed in. And our contract does not require a loss of earnings during the elimination period, so employees can get salary continuation up to of 100% and not be penalized with our contract.
On the Back on Track, explain your Back on Track program, how you encourage them to come back to work. I mean, they're on long-term, they've already been on short-term disability or may have been out that period, but then they go on the long-term. What tools are you using to ensure that they do get back to work?
The Back on Track is our partial disability, so it's having a little bit richer partial disability benefit for them while they're doing that, but also with the the external partners that we have that help not only evaluate the employees that are out there. We do that from a claim standpoint internally, but the partners that we have that help place disabled employees. So using those resources, helping find employers that want to hire disabled employees. Again, maybe it's something that they can do for 5 hours a week, but giving them the ability to find those resources out there as opposed to the employee sitting at home trying to say, how do I find a job? Where do I go? People aren't going to hire me.
So the employees that we have that would go out on a long-term disability, you're saying you're not trying to return them to work to Rutherford County, you're just trying to find them gainful employment?
Both. It works both ways. There's situations where employees are able to go back to their job at the county or wherever they are. But there's situations, because of what they were doing within the county, that they can't go back to work there because, their new capacities can't facilitate what they were doing before. Or it's a situation where the county has filled that position and it's not available to them, so we're helping them find a replacement position elsewhere. So the opportunity is for them to come back here if there's an opening, if there's an ability, or to help them find something elsewhere for them to be able to do.
So let me give an example to help clarify and make sure I understand it. We have someone who, let's use the ambulance since we have someone here. We have someone that works over in the ambulance department that sustains a injury to their leg, and they can no longer perform the service as a paramedic, and there's going to be residual impairment to that leg, so they will never regain the ability to become a paramedic. And there's not another position in the ambulance department available for them, nor in the county, for us to place that employee. But they are able to work in some capacity, and they want to go back to work. So you would assist them in doing an evaluation of what is available in the market for them to return to work and assist them in doing that if they so choose.
Correct. For the first 2 years, the contract is set up for the definition of disability to be based off of their own occupation. After that, it's based on any occupation that their past training and experiences will allow. So, for a paramedic, for example, they can no longer to ride in the ambulance and do what they need to do that way because of the lifting or whatever else is involved. But because of their training they have, they may, and if they want to, they may be able to work in a clinic and provide services where they can either sit, part of the time, or it doesn't require the lifting. So they can still use their training and experience and get back to work that way. And for the first 2 years, what we look at is we have a 1% earnings loss. So if they lose 1% of their earnings, we'll make them whole up to 100% if they're working in that capacity. And after that, we have a 15% earnings test, which means if they've lost 15% of their earnings, they're back to work and not earning up to 100%, then we're gonna help them and supplement from that standpoint also.
So does the county pay, how this impacts the county, so based on that, does that impact our premium when we do that? I mean, we've got people on long-term disability, and we do want them to be able to go back to work if they can, so you're offsetting the difference of the salaries they lost. So is that then charged back to the county in premium?
The way that it works is that the claims dollars that are on the experience report, as employees, if they're fully disabled, then we have the monthly benefit that we're paying, and then we have reserves that we have set aside for them. As they are improving and going back to work, or if they're approved by Social Security, then we reevaluate the reserves that are held out there because we know that we don't have as much money that we have to hold in order to pay those claims. So those reserves are released and or lowered or removed as employees are either approved for Social Security, back at work, or healed or recover.
Other questions? Mr. Sandvig.
Yes. Just on the regular disability, not return to work, and I just want to make sure I heard right. So you would be paid with either loss of duties or loss of income? Did I understand that right?
Our contract is you can qualify for the disability with loss of duties and no loss of income. In order to receive a payout, you'd have to have at least a 1% loss of earnings, because if someone is disabled and not able to work and there's no loss of earnings, then there's nothing to supplement.
So someone who is out and they're utilizing their sick bank, their sick time, so they're receiving 100% payment, but they're disabled, and that's what, until they basically utilize all of their sick time, there wouldn't be a benefit there because they haven't incurred the 1% loss of income. Is that correct?
How long, what's the max bank that somebody can build up from a sick time standpoint?
There's not one.
Not limited.
Depends
There's
on,
not
I mean,
one?
there's-
We have some clients that have that situation, and so what we've done is we've looked at the contract and we've been able to modify it based on the sick banks that are out there to determine that they can get a disability benefit and also sick pay. So that's something that we can look at to adjust a contract accordingly with some additional information.
And what do you typically do in a scenario like that, out of curiosity? How long of a sick bank time do you require? 6 months, a year?
The last one I did on, they had, I think, a little over a year of sick time built up. And, it was employees that accumulated and it never went away. They never used it because they used vacation. And we wrote, I can't remember, the wording that we wrote in the contract was, it was the STD elimination, or the LTD elimination of 180 days, I think, plus another 7 or 8 or 9 months that we put in there for them to be able to continue to get sick pay and then also a long-term disability benefit, knowing that that was going to be exhausted further down the road. Some groups want to include it that way because they want their employees to be able to take advantage of the sick pay bank that they've built up. Others don't want them to be able to get a long-term disability benefit while they're getting their sick pay because those claim dollars that are being paid out are going toward their experience, which is evaluated at renewal time.
Okay, other questions? Ms. Stevenson?
On the EAP that you have on here, what type services are you providing for that? We have an EAP carrier. Are you providing something different and unique that is just specifically around?
Yeah, the EAP that we provide it for all of our long-term disability clients. It's kind of a scaled-back EAP. It's probably not the same that you have in force. It does provide face-to-face, unlimited telephonic consultation. It's 4 face-to-face visits for the employees and their dependents. But it doesn't include employer referral, which I know is important for a lot of people from, either workplace violence or drug testing, et cetera, and they want to be able to refer employees to the EAP service. It does not provide that. It doesn't provide utilization reports, nor does it provide annual on-site training for the HR team or for employees. So it's very scaled back.
So if this was an a la carte and we were choosing items to pick and choose, if we didn't need the EAP, would that make a difference?
It's not really. It's because it's spread out over our entire block of business. It's not even a full 0.5% that it goes into the rate. And what we did is I think the underwriter initially had quoted with the self-reported limitations in there, which I know that you didn't have, and so we were able to take that out and hold the rate where it was.
Okay.
On this progressive income benefit, that's 10%. I don't quite understand that. Tell me when that kicks in, when a person is able to actually receive that additional amount of 10%.
The progressive income benefit kicks in if an employee loses 2 or more, the ability to perform 2 or more activities of daily living, such as bathing themselves, going to the bathroom on their own, feeding themselves. And so it's pretty catastrophic disability that is what has to occur, for paralysis, for a major stroke, something of that nature happens, then the progressive income benefit would kick in and provide an additional 10% benefit for them.
Okay. Other questions? Anything else, Mrs. Stinson? Okay, thank you very much. And next, we will be awaiting a presentation from Cigna. Proceed as you wish.
Sure. Whenever you're ready to start.
How's everybody doing?
Good.
Good. Well, If you guys are okay with it, I'll get started. My name's Colby Paxton. I'm with Cigna Group Insurance. I brought Jennifer Skillman, who's also with Cigna Group Insurance. We're out of our Nashville office. First, I'd just like to thank you for the opportunity. Thanks for letting me be here and discuss what we proposed. I won't take too much time. I know we got a time constraint, but I just wanted to simply go over a little bit about who we are, and then go through some of the highlights of what we proposed, and then also introduce you or talk a little bit about our team structure, about how the service would be on this LTD policy. If we turn to the first page, I'm sure you guys are aware of Cigna Healthcare, who's your current medical provider. Cigna Group Insurance is a subsidiary of Cigna Healthcare, and we've been doing disability insurance for over 50 years. And Cigna Healthcare is a large part of what we do is health insurance, but also a large part of what we do is what we term group insurance, which is life and disability. We've done annually we receive about $1.3 billion in premium from life and disability policies. Our financial ratings for Cigna Healthcare and Cigna Group Insurance are A or excellent, with AM Best. And of the 25 or 30 LTD carriers, we're in the top 4. We are number 4 in terms of overall size of premium, and we're the fastest growing of those 4. So within the past 5 years, we've consistently been one of the fastest growing. One of the things I want to note, too, in the middle of the page is under solid reputation, when it speaks to our persistency. One of the things I always like to talk about is most anybody can sell a piece of business due to pricing or whatnot, but we like to think we do a good job servicing. So I'll highlight we have a 95% persistency in a 9-year average relationship with groups that are over 5,000 employees. And locally, within this market, it's 94%. So that's one of the things that we like to talk about, is that we don't just sell the businesses. We try to do a good job servicing, which is important. I talked about a little bit with regard to how Cigna Healthcare is owned by, Cigna Healthcare owns Cigna Group Insurance. Through our ability to look at claim data, when a disability comes into us, a long-term disability comes into Cigna, and if we have the Cigna Healthcare, we have the ability to look at that claim information across the system, whether that's pharmacy information or whatever the claim notes may be. We're able to share that information across the system, which in turn allows for quicker turnaround times on decisions. Let's see. One of the things I would also like to highlight with regard to how we service an LTD client is that on cases such as this, there's a culture within the county. There's a culture within even the government or the highway. And what we do is we assign we have assigned claim teams, and those teams work on Rutherford County. You would know their name, their email, and their phone number, and they get to know the culture of Rutherford County or another company like that. So that's a couple things I wanted to highlight there. In terms of how Cigna services and installs a group, we like to take the approach that we want people who are very familiar with their group installing and servicing and ongoing management. So I brought Jennifer Skillman here with me, and Jennifer's out of our Franklin office, and she is would be the account manager on this account. She works on anything over 500 employees. And Jennifer's a 20-year veteran of group insurance. She's been doing underwriting, claims, and service for the past 20 years with a number of different companies. But she's very knowledgeable, and our thought is that we want someone who's local to manage your account. We want someone who's able to come out and meet with you on a relational level. And then on the back end, We also have what's called account service representatives. Our account service representative on this account, his name would be Angel Feliciano. Angel's at his office most days. In the event that Jennifer's traveling to see you or traveling to see someone else, he's able to respond to inquiries real time. And we do that so that we can have someone who's proactive in managing your account. And then also, if you need quick information, we've got someone who can do that. One other item to note is that we have assigned implementation coordinators. And what that means is someone who their sole purpose is to help install this account. Because what happens is if you don't install an account correctly, it can be a problem. So we have implementation coordinators versus account managers who also install cases. It gives a level of expertise to the process. They've kind of been there, done that in terms of setting up groups, setting up enrollments, setting up the account structure and billing. So their sole purpose is to do that and to set up the account appropriately. Lastly, I wanted to highlight really quickly some of the highlights of our offering. We did, I feel like, a good job mirroring the current benefits of the plan for Rutherford County. But some of the things that we feel strongly about is, as I mentioned, the service aspect of our offering. So much so that we're willing to put up to 2% in performance guarantees to say that if we don't hit certain metrics, we'll give you money back. That's how we feel about our service offering. The 2% can be applied to implementation, account management, customer service, and specifically on LTD. You can apply it towards decision times and payment accuracy. And we do that to show you guys that we believe in what we're doing and we think we can do a good job. And that's one of the things that we included with our offering. Another item that we have, since we do have Cigna, since we do have the healthcare on Rutherford County, when we integrate cases like this, there's what's called an integration credit that's applied on Cigna Healthcare. And what that means is you would have a $20,000 credit towards your medical ASO premiums that you're currently paying. There'd be a $20,000 reduction in those premiums by adding our LTD. From a holistic view, Cigna believes that the more services that we have with you, the more profitable we are, and the better we can manage you guys and lower your costs. One thing I do want to note is that in the event that there's a bid, I believe there is a bidding next year that the contract with Cigna Healthcare comes up middle part of next year. If we were to lose that business, then we would still honor the $20,000 integration credit even after we lost the business. And that's through the rate guarantee period. So that's one thing I want to note. And then lastly, the financial savings part, and I'm sure you guys have spreadsheets and so forth, but one of the things I wanted to look at was over the 3-year period of this contract, based upon what you're currently paying, how does that stack up in terms of dollars and a percentage? And on option 1, it's about $325,000 versus what you would be paying in your current situation versus what we're offering. And that's over a 3-year period, or 25% reduction. And option 2, it's $266,000, or just under 21%. With that, like I said, I wanted to just highlight a few things about what we do and how we do it, and introduce you to who we are and what we feel like we can provide, and so that you meet the faces of the people who will be handling the account. We appreciate the time and hopeful that you guys will make the right choice, and that we will be a part of what you're doing. So thank you for the opportunity.
Okay, I'm sure we're going to have some questions. You're completed. Let me just start with a hard question, since I'm a numbers person sometimes. You said on the last thing you said in option 1 that the 3-year savings versus the current premium is $325,000. Well,
Did
you include the implementation
Right,
credit?
sorry, so that was the integration credit
Yeah,
included.
I had that question too.
Okay,
So I guess it would be $60,000.
Well, it depends on what the premium comes in. We were showing
But we had
70,000.
included
Of course, that's adjusted based on volume as well.
Yeah, that was based on current covered payroll that we had.
Okay, because we had about 80,000, but the 80,000 plus the 20 is 100,000 or thereabouts, right?
We have, well, it depends on which percentage you're looking at there.
Yeah.
Yeah,
Okay, so you'd already added back the $20,000
yeah.
So that's
administrative fee savings if,
That's inclusive of that number.
okay.
And you said that on the implementation credit, that should we replace our ASO arrangement with Cigna on the medical next year, that you're continue to honor that $20,000. So that would reduce this .175 or
It's about
0.165.
.18,
That's what it comes out to.
.165 with what commission?
Depends, that's with the option 1.
So that's with the 5% commission. So it'd come down to about .175 with the 10% commission?
I believe so.
Okay.
Okay.
One penny or 1 point equated to about $20,000, 19 and change.
Okay.
Okay, Mrs. Stevenson.
First question, on your partial disability, do you require that there be an income loss in order for them to earn partial disability?
No. One of the things we quoted is what's called our OR definition, which means...
It's called the what?
It's OR definition, which means that you can have a loss of duties or a loss of earnings, but you're not required to have both in order to satisfy the elimination period and the benefit period.
Okay. And next question, on your performance guarantees, do you have a maximum?
2% of the...
No matter how many times you do it, it's 2%?
So what we would do is break it out. You can apply all of it to one section, and typically what it is based on the current calendar year is what they're going to do, is say, if we didn't meet that requirement at the annual review, it would be paid at the end of the year.
So we could attach a 0.5% to each of the 4 categories there for the total of the 2%. Yeah. One thing that I wanted to note here, just so that as we're comparison, on your block of business, you had 1.3 billion premium. That is only on your disability.
Sorry, that's group insurance, so life and disability and accident.
So, okay.
Not inclusive of anything related to health insurance.
Okay.
This business about these performance guarantees, you've listed 4 areas there. Is that something that would have to be worked out as far as putting the metrics associated with those when you finalize an agreement?
Right, as opposed to, I didn't want to list all of them and make this cumbersome, so generally speaking, those are the 4 areas, and then you can drill down further based on certain criteria and apply the funds that way.
Rutherford County would have an opportunity to participate in defining those as far as which ones we choose are.
Right, and I can send a template that shows how those break out.
Okay. Other questions? Okay, are we getting tired? If there are no other questions, then we appreciate your presentation, and thank you very much. Now, both of you are located where?
In the Franklin, Tennessee office.
So you're in the office there?
Yes, sir.
And he told us, I believe, Jennifer, that you're responsible for 500 people there.
500, over 500 lives is the size of my accounts. So it started at 500 and max out at 5,000.
Oh,
So
okay.
that's the size of the accounts.
That's the size of the accounts that
Nothing
you
under
met.
Yeah, nothing under 500, nothing over 500. Oh, I don't
Okay.
have that then.
Okay.
I have one more question, Cody. Is there a maximum increase guarantee? So if we were to elect Cigna and it comes renewal time, is there any type of guarantee that you won't increase your rate by X percent?
There's not now.
All right.
Anyone else wishing to speak? Okay, if not, thank you very much. Okay. Okay, Mrs., all of these, well, several of these companies were represented by Cowan Benefits, in that they are a local agency that's representing these people, and they're the ones that's helping provide some of these benefits outside of just the insurance that we're receiving. So I believe Ms. Stinson wants to give you, the people from Cowan Benefits, an opportunity just to, for any of our committee members to ask them any questions pertaining to these bids. So if Mr. Brown and Mrs. Martin, if they want to come forward and please.
Anything prepared for you guys. I think they both did a very good presentation, gave you opportunity to ask questions. So I just want to make sure as you're looking at the grid of the comparison of the benefits and the rates, give you an opportunity just to ask us if you had any specific questions that they may have not been able to answer, because they obviously didn't get an opportunity to see which each other was able to quote. They only knew what the current plan was. So looking at them both just from a consultant perspective, I mean, I think you've definitely narrowed it down to two really good choices as far as a service perspective. As I think one of them said, the long-term disability of the life and disabilities is probably the easiest to transition over, as far as some of the issues with supplemental life insurance, and as one of them was talking about some of those things. But the flip side, this is probably of the three the most important benefit too, because if you've got an employee that you're working with that has some type of a long-term disability or illness, this would be the benefit that you want to make sure they have, and that the carrier is going to take care of them, not only for those first 2 years, but potentially on through to Social Security age. Like I said earlier, I think you've narrowed it down to two very good options. They've both been in business for a long time. We have a lot of business with both vendors, so I know we feel comfortable with both of those. As far as the benefits, as you're looking at your grid, I think they've done a good job of pairing up the benefits. Lincoln had a couple benefits that may be a little bit better than Hartford. Cigna's lined up pretty well to Hartford as it is today, but nothing that most likely during the contract overview process, once you guys make an election or a decision there, once we go back and work with them to make sure the contracts are exactly the same or not better than what you have today, I feel that a lot of those changes we can make if needed. It obviously no impact to the pricing. So not helping you out a whole lot with your choice, but obviously the cost is probably one of the, if service is good, implementation is going to be good. They both have local representation, benefits are in line. The last thing is decide is on cost, and there is some differences a little bit how you want to look at the cost. I think that's kind of where I would narrow it down to, unless you guys have any specific questions.
I'll ask one question. The 5% commission versus the 10% commission, you people are the ones preparing this extra material. I guess you could review that just a little bit for us. But as I just sort of go from 5% to 10%, it looks like the cost of this additional material, more or less, is $20,000 for Cigna, but only $16,000 for Lincoln. So what's the, since we're going to get roughly the same material from Cowan, how did that difference in the cost to us differ by $4,000?
I saw that too, and I don't really know this. I'm not really sure they answered that either. I mean, you can see that the pennies get rounded out to 17.8 or 17. There's probably even another decimal place there that their underwriters use. So I have a feeling this is part of a rounding issue, but I don't really know the answer to that either.
Okay.
But I noticed that when I was sitting back there.
So in your judgment, this extra pieces of information we're going to get, what is that, and do you think that's really meaningful and worth those extra dollars to us?
Yeah, so the difference between the two carriers, I'm not very good at explaining why that's the $4,000 difference, but the difference between the 5% and the 10% is, we've already started looking at open enrollment for this year and putting together a strategy of what's best to go out and how to communicate these changes for the open enrollment to the employees. And one of the things that was decided with the insurance committee's main input on this is, instead of doing the meetings, the very first year we worked with you guys, we did mandatory meetings at all locations. We went out and did over over 100 meetings across the county, had really good participation. Last year, due to the very minimal changes, we scaled that back and did probably around 10 to 15 meetings, had very minimal participation at those locations, and still getting a lot of questions, a lot of volume of calls during that open enrollment time into the insurance department, from anything about their benefits to how to get them to the system, to how to make their changes, to what do I need to do. And so one of the recommendations this year was to do a DVD and actually give that to every employee, explaining the enrollment process and also going over the benefits and the potential changes this year. Obviously, to produce the DVD, to burn the disc, to mail it out to the locations, there's a cost associated with that. Another thing we looked at is in the past we've bulk shipped the packets, the open enrollment packets you guys get specifically to the schools. We've bulk shipped that to the schools. So we would send 100 to 250 packets to the school, and there would be some miscommunication there as far as getting some of those out at some of the locations. So one thought this year was to mail them directly to the homes. And obviously, when you mail a packet to the home versus bulk shipping 250 to a location, it increases the cost essentially by about 300%. And so just those two things changing this year to hopefully make open enrollment a little smoother, get people a little more educated about the changes, is going to cost in the neighborhood of about $25,000. And so one of our proposals was, if we were awarded the long-term disability benefit as your consultant and we were able to increase that commission, because we knew by looking at the quote we were going to get you, as Cigna said, you're going to save $300,000 versus what you're paying today from Hartford to move to either one of these guys. You're going to save almost $300,000 in just this one benefit. So if we could include that price in these rates and cover that so you guys don't have to pay that or write a separate check and still save you money, it seemed like that would be a good option. So just at least something to consider.
If I could just interject on one comment that you just made, Jay. You talked about the miscommunication. Really the issue was about the timing of the distribution of the packets. So we have an X period of time for open enrollment. Some distributions of the packets may occur the day that they were received in whatever office it was. Other comments that were received back was, I just got them this week, and it would be the last week of open enrollment. So to ensure that we have information in the employee's hands so that they can make the decision for their open enrollment within the same time frame, that's one of the reasons that it has become necessary that we mail to the home, and that will come at an expense for us to do that.
Ms. Stevenson.
Just a quick question. Do you think it would be beneficial then that we maybe send out a notice to all employees that if they've not checked to update their address and stuff, that we do that so that we don't have a lot of packets not going to people's homes? Do you think that would be a benefit too?
And I think when I talked to Ronnie, we had a lunch a while back going over this, that you guys recently sent out a mailer to this, and I think it has already been done. There's very few that came back from that mailer, then we were going to use that same list.
Right, that we kind of accomplished that goal during our healthcare reform notice that we mailed out.
Ms. Hickerson.
Yes, sir. Along the lines with the miscommunication and getting the information out, to me, the difference between the 5 and 10,000, or 5 and 10%, the $20,000, is a good investment to think about, because that's just $20,000. That's the extra help the insurance department needs without putting another employee on a salary more than $20,000, a salary that would have benefits. So to me, when I looked at this in the subcommittee, it was a no-brainer, because I do know how the insurance department works and how they are slammed, and the investment of $20,000 is a whole lot cheaper on the county's part for not having to put another body in there. Oh, they'd love to have another body to help for the rest of the year, but one thing at a time, and it doesn't look like that's going to happen. So this would be a good investment and help, and then the people have this in hand, and it's not what's sitting on his desk or whoever's desk. It's, did you go to the mailbox?
And this is strictly just our cost. We have a vendor that we use to do the DVDs. We've done that for several clients. Postage, we're going to use a postage company to do that, to do the mailers. So literally this is just the cost of doing that piece. But the value that it brings from working with you guys for 2.5 years now during that open enrollment process, I think, like you're saying, is going to be tremendous value to just the time that they put in during that time to address all the questions and things like that.
If I could just make two final comments. I just want to first remind the committee that the total monthly cost, total annual cost are illustrations there because our payroll will change and our premiums each month is contingent upon our payroll. We pay so much per $100 in payroll. The other piece that I want to just clarify is based on something that was said by Cigna today, is that on the implementation credit, we'll see immediately a $20,000 savings over the course of a 12-month period on the Cigna ASO side. And then if we replace that arrangement, what he said was that we would still realize that savings. They would adjust their premium basically to offset that cost should we replace the ASO, which would bring the 5% commission rate down from 0.175 to 0.165 and the 10% commission rate from 0.185 down to 1.75. Is that correct?
That is correct. I mean, that was a concern that they had, is that they had no control over the potential bid next year, so they didn't want that to be necessarily a deterrent if that's the carrier that you wanted to go with based on the presentation and the proposals. So they did agree to lower the rates in the second or third year if that's what you chose to do. And essentially what that does is in the cost, if I looked at it right, Cigna would then be in option one, including the credit, about $10,000 lower. In option two, for whatever reason, it's reduced to about $6,000. So overall, makes Cigna a little bit more competitive than the other, but when you're still talking $3.5 or $350,000, both of them it's not a ton of cost one way or the other, but they did want to take that kind of question mark out of the picture.
Okay, any other questions of the representatives from Cowan? If not, thank you very much. We appreciate it. Okay, ladies and gentlemen, you've heard the presentation from two reputable, strong insurance companies that have been in existence for a long time. And we have very, very competitive proposals here. What's the wishes of the committee? Mr. Sandvig, question.
When the subcommittee met, Ms. Stevenson and you were more open to, you felt the benefits were slightly better for Cigna. After hearing the full presentation, do you still feel that way?
I think that the benefits to the employee as a whole were probably better with the Cigna plan only because of the reduced cost. Anytime we reduce costs in our medical plan, then that affects what the premium ultimately ends up being. So I think there's some more complicated, thoughts of why it might be better than the other. I think in favor of Lincoln, however, is the return to work partial progressive or disability formula that he talked about. But the Cigna meets our current plan that we've had in place with Hartford, and we haven't had any concerns about benefit payment, the amount being paid, to say, over the period of time that we've been with Hartford. So I don't know that even with that improvement, yes, it is better for the employees, but I don't know that if we didn't have that, if it would be an issue for employees either.
Ms. Grace.
I just had a question. I noticed in the Lincoln literature that it mentioned that there's email and online services so that people can check the status of their claim and if their check has been mailed yet, which also keeps people from calling the insurance department. Does Cigna also offer that? I know we can look at our medical claims online, but does the Cigna long-term disability offer a way for a person to go online and check their claim?
See what they have in your proposal here. Yes, it says that through MyCigna, which is our current portal that we use for the medical side as well. It allows employees to file their claim via the web, which would lead me to the assumption that they could also gain additional information through the web about their claims. It says there is a manager toolkit as well, which would give us the ability to look online and see what the status is as well.
Okay, was that answered your question a little bit, Mr. Hall?
I was just curious if there was anything on the second page that where there are different, if there's anything that stood out to you that was something that was necessarily a lot better for one or a lot less for the other. I didn't bring my glasses, so I can't. It's hard to read.
Yeah, I know. Evelyn's already mentioned to me the font size as we were listening to things up here. I think that the partial disability formula is one that I just referenced, but the other piece is the OR, what he called the OR definition, which is the loss of duties or loss of income. So in the event that someone had a loss of duties, it immediately begins the benefit elimination period and subsequent benefits under Cigna, whereas Lincoln said that the elimination period is loss of duties only, but then they have to have the 1% reduction in income before benefits would become payable. So that's when we talked about the sick bank, and if someone has a sick bank, then they would have to exhaust that and with Lincoln before benefits would start to pay, whereas with Cigna, it would pay during the time that they may be receiving a sick benefit pay as well.
Other questions? Mrs. Hickerson has a microphone in her hand. Do you wish to speak, Ms. Hickerson, or does Mr. Sandvig wish to speak first?
I'll go first. Ladies first. Based on the presentation and everything, I would like to make a motion that we go with Cigna on the LTD with the 10% commission to help offset the stress on the insurance department, with a note that Cigna offers the benefits payment with either loss or duties or loss of income, because that is a big thing, because if not, you're hurting somebody that was able to save their sick time and not use it. So I'd like to make a motion that we go with Cigna on the LTD, the 10% rate.
Okay, do we have a second? Are you seconding that, Mr. Sandvig? Now, Mrs. Hickerson, would you allow, we discussed a little bit about these performance incentives. Would you allow to include in your motion the right to negotiate some of the details, such as those incentive definitions that need to be made?
It has to include that implementation credit if they move from the ASO.
Okay. So, and Mrs. Stinson would suggest that we include also that at the 5% commission level, the rate per 100 of payroll is 0.165, and at 10%, which is your motion, is 0.175.
Or whatever the equivalent of the implementation credit is, in case my math is bad.
Yep. And make note that this would include that they have guaranteed the 20,000 ASO credit if they so lose the administrative agreement with us. So is that your second, Mr. Sandvig? Okay, now discussion. Any other discussion? If there's no other discussion, then all of you that are in favor of that, please say aye. Aye. Are there any opposed? Okay, so that is carried. We have 3 of our at-large members whose terms are expiring, Mr. Sellers, Mr. Hall, and Mr. Hester, and I believe all 3 of those gentlemen have graciously agreed to continue to serve, and so they will be suggested to the commission, and we'll ask for their confirmation of those reappointments. Other business, excuse me, Ms. Stinson.
We also And my apologies to Mr. Jones and Ms. Crace. I had intended to call you prior to today's meeting. When we looked at the members at large, we also looked at what had originally been proposed and approved for the county general positions, which are currently by Mr. Jones and Ms. Crace, and there was not a set time frame on those positions. So it was, the recommendation is being made that we modify that to accept applications for those positions in the fall sometime for an effective date of January the 1st, 2012. And we define some periods around those, with one position having an initial term of 4 years and a subsequent 2-year term, and the other position having an initial term of 2 years with a subsequent 4-year term, much like we do with our members at large. At least that way, if there become other employees in the county that want to participate in insurance, I know how exciting people find it to be, then that would give them the opportunity to make application and participate possibly on it. And of course, we would encourage the application of both of our current county general employees as well.
Okay. Without, hope that didn't particularly trouble Mrs. Crace and Mr. Jones, and I think, Ms. Stinson, we should make that proposal to the steering committee sometime August or after, so that we can get that officially done properly. Any other discussion? Any other business? If there's no other business, the meeting is adjourned. Thank you very much.